Just 1 week ago, March 31st, the New York Times reported the FDA is moving to lift restrictions on more than a dozen injectable peptides. Now, what does that mean for HIMS moving forward? Because we know they purchased a peptide production facility quite a while ago. So what happens when you combine 14 very popular, previously restricted peptides, a $100 billion global market by 2030, with a publicly traded company with a California peptide factory, 2 million subscribers, and the infrastructure of distribution already built? By the end of this video, you're going to understand why this is going to affect HIMS and what this looks like in the future, what this peptide reclassification actually means, the regulatory mechanics, and why it really matters to HIMS. Also, why the positioning is so important right now to capture this market, and the evidence that management saw this coming 14 months before the headline arrived. And we're also going to look at the maths, as we always do, what the average revenue per user looks like, even what a 10% peptide adoption does to HIMS revenue without adding a single new subscriber.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
But before we do, if you don't know who I am, my name is Mikhail, one of my highest values in life and freedom. And right now in the stock market, I am seeing people suffer. We are down 35%, 20%, 10% on some of the biggest tickers in the space. And if you're in this position, I feel it. I feel your pain, but you need to understand there's a long-term vision at play. And there's two different ways you can approach this. One, white knuckle your way through and hold on to those stocks and hope they come back, or hope they do get to where you need them to be, or include a daily investment strategy as well. We're a big believer of the golden rule: 80% long-term holds, 20% short-term in the market. Now, not everyone is equipped with the time, skill set, and emotional reactivity to be able to trade daily in the markets. That's why at X10, we have built an AutoPilot software that allows our team of pro traders on the back end trade completely hands-off for you. Now, if you were to join us back in September, your portfolio would have already had over a 20% realized gain. In just a few months, we have got these numbers for clients. They have portfolios anywhere from 10K all the way up to $500,000 using our software to trade every single day. And that's realized gains. That's liquid in your account that's accessible at any moment. So if you want to find out how our team of professional traders can trade so you are completely hands-off, leverage their skills, experience, and time, just go to x10daytrade.com, click the link below, and I'll walk you through the entire process and also show you why we're so certain in what we do, which is why we have a 100% money-back guarantee. Outside of that, let's get stuck into the video today. Before we dive into the peptide market as a whole and what it's worth, I want to show you the sequence of events that makes this so compelling going forward, and also show you this was not luck. See, February 2025, HIMS acquires a California peptide production facility. No fanfare, no major press coverage. I've spoken about this in depth on one of my other videos. This wasn't a big deal in the news. A quiet operational move 14 months before the market opened. Now, November 2025, the Q3 earnings call. The CEO, Andrew Dudum, explicitly names peptides as a planned 2026 longevity specialty launch, specifically mentioning GLP-1 and GIP treatment peptides and coenzymes. Here's telling you what is coming. Now, fast forward to March 2026, where RFK Jr. appears on the Joe Rogan podcast and says 14 peptides will be returned to legal compounding in the coming weeks. Let's look at that clip here.
We're 19 peptides. They illegally move those to category 2, which says do not formulate. There was huge demand for peptides. And so a black market came out. And the black market is run by companies that say that they're making the peptides for animal use or for research purposes. I'm very anxious to move, probably not all of those peptides, some of them are in litigation, but about 14 of them back to making them more accessible.
Now, on March 31st, the New York Times confirms the FDA is moving to lift restrictions. Now, on March 31st, the New York Times published this was happening. Now, this sequence is not a coincidence for HIMS. HIMS management bought a factory 14 months before regulatory market opened. That is a calculated strategic move in a regulatory environment they believed was shifting. And now it is shifting, and it has shifted. So if we look at this first graphic here, this is covering some of the peptides that are coming into a category 1. We got BPC 157, TB 500. Both of these I've used before for a knee injury. Now, my own personal experience, I was I guess I was caught up in the peptide hype maybe 3 years ago, and I used these because I've had a past surgery on my knee 10 years ago. And I'm going through a midlife crisis where I'm trying to get as athletic as I possibly can to play basketball at a very high level. Now, I might be going through a bit of a midlife crisis here, but I'm trying to get as athletic as possible in my late 30s. And this old knee injury isn't going away. So I got caught up in the hype thinking the peptides will just solve everything, and I relied too heavily on them. Did they help me? A little bit. Like, they helped a little bit, but honestly, all the performance and sport training around it helped me a lot more. I'm not a walking testimonial for these, but I know many people that have had some amazing results on the back end. So if we get into the other ones, we've got CJC1295, Ipamorelin, PT141, and AOD9604, and melanotan. These are going to be 7 that are coming. Now, there are 7 others pending: GHKCU, LL37, MOTC, Epitalon, SS31, Thymosin Alpha, and CMAX. Some of these I'm not too familiar with, but about half of them I've heard and referenced and looked into quite a bit myself before. So on the left-hand side, we can see 25 billion in 2022. This is the global peptide market and what it looks like. 32 billion in 2023, 42 billion in 2024, 55 billion in 2025. You can see how much this curve is going upwards more and more sharply by the right-hand side. Now, the line curves very sharply from 68 billion up to 82 billion in 2020. This is starting to look like a $100 billion industry by 2030. Now, if we look at the 2026 here, we've got a green bar here that indicates when the HIMS peptide window is going to open. Now, that band is the timing overlap between HIMS facility being ready and the projected market expansion. Now, obviously, we don't have a time machine. We can't see into the end of 2026 and 2028, but these are projections on the current 4 years of data we have. So the first thing is, when we look at these 14 compounds, if you've never heard of them before, I'm going to break them down here for you. So we've got them covering actually different applications across all these 14 compounds. You've got injury recovery, fat metabolism, sexual health, cognitive function, skincare, and growth hormone stimulation. Now, this is not a niche market. This is a broad multi-category opportunity, and that maps almost perfectly onto the HIMS categories HIMS already serves. So let's look at the actual regulatory mechanics clearly behind this, because this is the difference between a black market product and a legitimate physician's prescribed clinical intervention. Now, there is quite a few peptides out there. You don't know what lab it's coming from, how legit it is, any of this, and it's very, very hard to tell. Now, don't quote me on this because I don't have my lab coat on right now, but these usually come in a freeze-dried powdered form, the ones I'm familiar with, right? And you'll mix this with a sterile water solution or a bacterial static water solution as well. Now, it's very hard for the average consumer to be able to tell what's legit and what's not. So if you are purchasing them through non-verified labs, you do run the risk of using something that potentially isn't what it says it is. Now, in 2023, the FDA moved 14 peptides from the bulk drug substance list to Category 2. Category 2 is effectively prohibits licensed compounding pharmacies from producing them. Now, the FDA is moving them back to Category 1. Category 1 substances are ones that compounding pharmacies can legally use. So they produce custom medications for individual patients based on a physician's prescription. Now, moving from Category 2 back to Category 1 does not make these FDA-approved drugs. These peptides are still off-label therapies that require a physician's judgment for each prescription. But it does mean that licensed compounding pharmacies like the one operated by HIMS in California can produce them legally. Now, they can be prescribed through regulated platforms. Patients can access them through legitimate clinical channels rather than unregulated offshore suppliers. I touched on that a little bit before. And the last point is where the market opportunity really lives, because the market that the FDA's 2023 restrictions drove underground is now being invited back into the legitimate clinical channel. Every dollar currently going to offshore, unregulated peptide suppliers is a dollar that could be captured by licensed American compounding pharmacies operating under FDA oversight. Now, with better quality control, better dosing, and better monitoring. HIMS has the factory, the clinical network, and the 2.5 million subscribers. None of its 3 competitors have all 3 of these. So if we look at what does this mean for HIMS and the operational side of things. Now, the California peptide production facility was acquired in February 2025 and is operational and licensed under FDA oversight for compounding operations. It needs no new construction, no major capital investment to begin producing 14 reclassified peptides once the regulatory change is formally enacted. The facility is ready. The clinical provider network is ready. The clinical provider network, which has been prescribing personalized GLP-1 protocols, testosterone support, SSRI treatments, and dermatology compounds, already has the clinical expertise and platform access to add peptide prescriptions to them. So they also have the MedMatch AI system, which matches subscribers to treatment protocols based on clinical history and comparable patient outcomes. So what does this mean? Well, it's directly applicable to the personalized dosing questions that peptide prescribing requires. Again, no new system needed. The infrastructure is already built. So let's walk through the specific peptides and why this overlap with HIMS is so precise. BPC 157, you may have seen this posted about. I've seen people speaking about this online for close to 7-8 years by now. Ben Greenfield, if you want to look into it, he's been a big advocate for a long time. Now, this has been studied before for accelerating injury recovery, reducing inflammation, and supporting gut health. One of the most requested peptides by athletes, physical therapy patients, and post-surgery recovery patients. TB500, a lot of times people will stack with BPC 157. Similar tissue regeneration and injury recovery applications as well. You've got CJC 125 and ipamorelin work together to stimulate natural growth hormone production, supporting muscle development, fat reduction, and sleep quality. And the last one is PT141, studied for its effects on sexual desire and arousal in both men and women, directly overlapping with the existing HIMS sexual health specialty. Now that serves hundreds of thousands of subscribers for ED and sexual wellness already. This overlap between peptides being reclassified and the clinical categories HIMS already dominates, it's not coincidental. The company built its subscriber base in exactly the health categories where peptide demand is highest. So let's look at the average revenue per user maths, because this is where the financial impact becomes very concrete. HIMS subscribers currently pay an average of $83 per month. A peptide protocol, injury recovery, growth hormone optimization, sexual health enhancement is expected to be priced in the range of $100 to $200 per month. Now, based on current concierge clinic pricing and comparable compounding costs, we didn't pull this number out of thin air. Now, if we run the math on that, if just 10% of the 2.5 million subscribers add a peptide subscription at $150 per month, that is 250,000 subscribers adding $150 per month. That equals 37, almost 38 million in additional monthly revenue, 450 million annualized. And what does that do to the blended average revenue per user? It rises it from our last earnings report of $83 to about $98 per month. That's an 18% revenue increase without adding a single new subscriber. Now layer that on top of the Wegovy pill expansion already underway and the Eucalyptus international revenue consolidating mid-2026. The revenue direction for HIMS in 2026 and 2027 is significantly more favorable than analysts' model built before any of these events were known. So if we go to this graphic here, this chart is just the management roadmap, and I want you to look at the scale of what they're targeting. So we look at the dark blue navy lines, that revenue growing from 2.35 billion in 2025 all the way up to 6.5 billion by 2030. The green bars are EBITDA growing from 0.3 billion to 1.3 billion over the same period. Now that is a steep change from 2025 to 2030, nearly tripling revenue in 5 years. Now that requires new revenue streams beyond the existing US business. The Wegovy pill distribution makes it more plausible because the Eucalyptus international revenue also makes it more plausible. And the peptide specialty launch adding hundreds of millions in average revenue per user driven revenue is what makes it mathematically very achievable. See, management confirmed this target on the Q4 2025 earnings call, which was on January 25, 2026. Now, the peptide opportunity was not modeled into most analysts' forecasts when this target was set. It is a layer of upside that most people have not priced in. Now, a lot of analysts project the global peptide therapeutics market at approximately 55 billion in 2025, growing to over 100 billion by 2030, a compounded annual growth rate of approximately 18%. Now, that growth reflects three forces. The first one, increasing consumer demand for longevity and performance health solutions. I feel like we're in a market, a perfect market that is pursuing that. The second, a growing body of clinical evidence supporting specific peptide applications. You're going to see a lot more of this come out once it does move to a category 1. The third one being expanding physician comfort with actually prescribing peptides to their clients. Once it moves to a category 1, this comfort for the physician now becomes It's another barrier of resistance, right? The American market also represents a disproportionate share of the global opportunity. American consumers have both the disposable income and the cultural inclination towards proactive health optimization. That drives peptide demand massively. And there's also a picture that no analyst has fully modeled. The competition for legal peptide market share will come from other compounding pharmacies and clinical practices, but none of them have 2.5 million digitally connected subscribers who are already accustomed to receiving prescription products through an app, and who are actively seeking exactly the health optimization outcomes that peptide therapies provide. The peptide market opportunity for HIMS is real. It is large, it is coming, and the infrastructure to capitalize on it is already built. Now, the peptide opportunity is not a lifeline for a struggling company. It is an additional growth lever for a company that is already profitable, already generating cash, and already growing its revenue base every single year. If we look at this graph here, we can see here the revenue from Q1 2024 all the way up to 2025. We've gone from Q1 24, 581 million, all the way to over $1 billion in a single quarter in 2025. On the right-hand side, you can see also in Q4 2025, we had a net income of 174 million. So HIMS is already generating cash and already growing its revenue base every single quarter. That is a fundamentally different risk profile. This is upside being added to a healthy business, not a pivot to save one that is failing. So let's bring this all together and recap for you. In 2025, in February, HIMS buys a peptide factory. Then November 2025, the CEO names Peptides as a planned 2026 launch on an earnings call. March 31st, 2026, the FDA confirms the reclassification is coming. That is 14 previously restricted peptides, a $100 billion global market by 2030, a California production facility that is operational and licensed right now, a clinical network that already prescribes personalized protocols to 2.5 million subscribers, and a MedMatch AI system that can route the right peptide protocol to the right patient. The average revenue per user math is very clean on this one. 10% peptide adoption at $150 per month adds $450 million in annualized revenue for HIMS, and takes the average revenue per user from $83 all the way up to $98. Without adding a single new subscriber. Now, in a market, a consumer world where everyone wants the quick fix, the quick thing, the speed to result, everything people are after, Peptides enters itself as, people are seeing it as a bit of a silver bullet to recoveries and health and all these things. It's not exactly that. It is a piece of it, but there are some people getting some amazing results on this. And in a society that is absolutely attached to instant validation, instant results, they just want the quick fix right now. This can be a quick fix, and it can also be a massive shift in people's life in so many different areas. HIMS is positioned perfectly for this. Anyone below, I would love to hear your comments on what do you think this happens with this new shift to all these peptides being put into a category 1? How does this affect the overall market, and how does this affect HIMS? And are you using any peptides yourself? I'd love to hear from you guys as well. As always, I'm making videos here every single day covering HIMS and everything happening in the market, past events, current events, and future projections. As always, I'll see you in a video tomorrow.